Today, we will talk about top 10 companies to invest in 2023. So before we get started, make sure to hit that like button, also subscribe to my channel. 1. Etsy. Before the COVID-19 pandemic, Etsy was growing nicely by connecting crafty makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. During the pandemic, e-commerce got a huge boost, but Etsy absolutely skyrocketed, growing at more than twice the rate of overall e-commerce. It certainly helped that Etsy was a natural fit when people wanted unique face masks, but its growth has been impressive across all product categories and continues. In the fourth quarter of 2022, Etsy's marketplace sales volume was up 144% over comparable pre-pandemic levels. As you may notice throughout this list, powerful platforms get my attention. Make no mistake, Etsy is one of them. Few e-commerce companies go head-to-head with Amazon and survive. Etsy not only survived when Amazon rolled out its own handmade items platform, it won. But this could still be the early days of an excellent long-term growth story. 2. Pinterest. Pinterest is an oasis of positivity in a social media landscape that's grown increasingly depressing and divisive. That partially flows from what Pinterest is about, which is ideas. People go to Pinterest to focus on things, not on other people. Whether it's building a dream deck, baking a kid's birthday cake, or updating your wardrobe, Pinterest gives people visual inspiration for the things they want to get done. Pinterest has been beaten down in the 2022 market decline, mainly because its user base contracted a bit as pandemic restrictions were lifted around the world, but recent results show growth has resumed. Plus, there's still lots of long-term user growth potential. 3. Block. Block, formerly known as Square, has evolved from a niche payment processing hardware company to a massive financial ecosystem for merchants and individuals. On the merchant side, Block processed about $186 billion in payment volume over the past 4 quarters, and it also offers a suite of adjacent services for businesses. On the individual side, Block has the Cash App, with 51 million monthly active users, as well as capabilities that include person-to-person money transfers, direct deposits, and debit cards, the ability to buy and sell stocks in Bitcoin, BTC 0.12%, and much more. Block also recently acquired music app Tidal, as well as the Afterpay Buy Now, Pay Later platform, which is starting to be reflected in the company's results. As its ecosystem evolves, the business should only get stronger. The long-term trend towards cashless payment adoption still has a long way to go, and with many potential growth verticals it could pursue, Block earns a spot on my top 10 best stocks to buy now. 4. Shopify. Shopify operates a platform designed to allow businesses of all sizes to sell their products online, with a particular focus on empowering smaller businesses and growing with them by establishing long-term relationships. Shopify offers a subscription plan starting at $29 per month for businesses, and it also offers many adjacent services that help businesses operate smoothly, such as payment processing solutions and logistics. Shopify's one-stop shop approach to enabling e-commerce has turned it into a powerhouse. It now has more e-commerce sales flowing through its ecosystem than any other company besides Amazon. However, Shopify could be just getting started. The platform has generated $5.6 billion in revenue over the past 4 quarters, but this is just a fraction of its estimated $153 billion, and growing market opportunity as more retailers shift their focus to online sales. 5. Realty Income. There's a solid case to be made that when it comes to value, growth, and income, it's tough to find a more well-rounded stock for long-term investors than Realty Income. If you aren't familiar with it, Realty Income is a real estate investment trust, or REIT, and primarily invests in freestanding, single-tenant retail properties. Walgreens, WBA 0.75%, Dollar General, DG 1.42%, and FedEx, FDX, 1.31%, are just a few examples of the top tenants. Realty Income owns more than 11,700 properties in the US and Europe. most of which are rather recession-resistant and less vulnerable to e-commerce disruption than many other retail businesses. Plus, Realty Income's triple net lease structure helps create a steady, predictable income stream. The proof is in the performance. Since its 1994 NYSE listing, Realty Income has produced 14.6% annualized total returns, handily outperforming the S&P 500. It has paid more than 600 consecutive monthly dividends. As of March 2023, yield is about 4.6% and has increased its payout a staggering 101 quarters in a row. 6. MercadoLibre. One of my favorite long-term stock investments in the market. MercadoLibre is often referred to as the Amazon of Latin America, and for good reason. The company operates an e-commerce marketplace that has a dominant presence in some of the most populous nations in the region, including Brazil and Argentina. However, there's a lot more to MercadoLibre. It operates a fast-growing payments platform called Mercado Pago, a logistics service known as Mercado Envios, a business lending platform, and more. The marketplace saw $9.6 billion in merchandise volume in the fourth quarter of 2022, and Mercado Pago processes more than $140 billion in annualized volume, with about two-thirds coming from outside the company's e-commerce platform. Both are growing rapidly. And don't overlook Mercado Crédito, the company's young but fast-growing lending business. Mercado Crédito has $2.8 billion of outstanding loan balances and has grown rapidly so far. 7. Intuitive Surgical. Robot-assisted surgery beats the shaky hands of humans. That general thesis hasn't changed much from when I first noticed Intuitive Surgical stock in 2005. The Da Vinci surgical system is the clear market leader, and the razors and blades model helps it generate a recurring stream of revenue as its systems are used to perform procedures. Intuitive Surgical is dominant in its space with a market share of about 80% worldwide, and it has lots of room to grow as its surgical systems increase in adoption, and the number of its supported procedures increases over time. This is particularly true in many international markets, where the implementation of robot-assisted surgery could be a long-tailed growth catalyst for this excellent business for decades to come. 8. Disney. The House of Mouse is the all-weather tires of a portfolio. The pandemic hurt its theme park and movie businesses, but helped the Disney Plus streaming service, which has grown into a powerhouse years earlier than Disney expected. In fact, Disney Plus now has more than 160 million subscribers less than 4 years after launching, while the company's initial 5-year goal called for 60 million to 90 million. In 2023, demand for Disney's theme parks and movies is stronger than ever, despite inflation pressures and recession fears. In fact, revenue is far greater than in comparable pre-pandemic times in Disney's parks due to initiatives that have driven higher per-guest spending. On the streaming side, Disney Plus has been a massive success, and Disney is now laser-focused on the profitability of Disney Plus and its other streaming platforms, Hulu and ESPN+. 9. Berkshire Hathaway. While most of this list is made up of growth stocks, or at least stocks that have some exciting growth drivers, this is the relatively boring value pick of the bunch, but in the best possible way. Berkshire Hathaway owns a collection of about 60 subsidiary businesses, including household names such as Jetco, Duracell, and Dairy Queen, just to name a few. Berkshire also owns a portfolio of common stocks worth more than $325 billion that includes massive stakes in Apple, AAPL 0.26%, Bank of America, BACI 0.94%, Chevron, CVX 4.33%, American Express, AXP 2.5%, and Coca-Cola KO 0.1%, as well as positions in dozens of other companies, many of which were personally handpicked by legendary investor Warren Buffett, who at age 92 still manages the bulk of Berkshire's investments. In fact, if Berkshire were a mutual fund, it would be the largest actively managed mutual fund in the world. 10. Amazon. Amazon doesn't really need much of an elevator pitch for most people. The company has a dominant lead in the U.S. e-commerce market, with about $500 billion in gross merchandise sales last year. And its Amazon Web Services cloud platform is also a market leader. However, more growth potential exists than you might think. We're a long way from maximizing e-commerce adoption. It still accounts for less than 15% of all U.S. retail sales. The cloud industry is relatively young as well and is expected to roughly quadruple in size to a $1.6 trillion market by 2030. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.